Alright, so in this video, I'm going to talk about how to budget, how to create a budget, how to track your expenses and revenues, and how to keep things simple without buying any expensive or fancy software. So I use a basic spreadsheet, as you can see here. I've got 4 columns, and what's super important is this column here, potential savings. What's important is that your monthly savings at the end is positive, not negative. So what's important is that you make more than you spend, or that you spend less than what you make. So I'm going to make this spreadsheet available if anyone wants it. Just email me in the description below. Now I've erased the numbers just to start a fresh one, just to give examples. And notice how this one here, yearly expenses, is a formula, and obviously this last column here is a formula as well. So the only inputs you need to make, the only place where you need to enter numbers will be your income, your yearly expenses, and some of your monthly expenses. So if we start off with the income column, obviously it's important to track your income, to know how much you make, but also know what are your different sources of income. Most people will have a job and an income that comes from employment. So that'll be the first column. But if you have different sources of income, you could write them down. For example, if you got interest coming from a savings account, if you got dividends from stocks, let's say you've got a side hustle or a small business on the side, you could write that down. If you've got government help, you can write that down as well. If you drive for Uber part-time, write it down. So any source of income you might have, you can add the list here. Now, in terms of your work, you're not going to put your gross income, of course, because that's not what you actually get in your pocket. You should put your net income, what you actually get paid in your bank account when you get your paycheck. And if you end up getting a refund at the end of the year from your taxes, well, based on your previous tax returns, if you know it's the same situation and you always get a refund, you can always add that amount. If you know that you always owe money, maybe remove it from your net income. But to keep things simple, just look at your net income that you get deposited in your bank account from your job. And here we want to look at it monthly. So if you're getting paid every 2 weeks, so let's say you're getting paid $2,000 every 2 weeks, then you want to just multiply that by 26 and then divide by 12 to get the monthly amount. So if you're getting paid $2,000 net every 2 weeks, then you're making $4,333 per month net from your employment. Let's say you've got interest in a savings account, you've got money in a savings account and you're collecting interest on it. Let's say $50 a month. And if you've got stocks that are invested in dividends, paying you maybe $100 a month, you write that down. If you've got a side business that you're working on that's generating you some income, put the average per month. So let's say $500. Let's say you've got children and you're getting child benefits. Maybe write that down, maybe an extra $500 a month. And let's say you drive for Uber on the weekend. Maybe you make an extra $500 a month. Now, it's important to be true to yourself and use real numbers so that you can be as accurate as possible. Now, you're going to get these numbers obviously from your bank statements. Now, you're going to go to your yearly expenses. Now, not all of our expenses are done monthly, and we sometimes tend to forget about those yearly expenses that happen once a year. So obviously it's important to track it down and allocate a monthly portion to it. So for example, if you've got a car, you pay for license plates, that's paid once a year. So I don't know, let's say $300. If you've got a driver's license, let's say $100. If you got any memberships, I wrote CPA, but let me just write membership instead, just to make it more general. You can put that in. If you own a house or a condo, you've got property taxes, you can put that in as well, because that's usually not paid in a monthly basis. You've got car maintenance as well, that's not usually on a monthly basis. So if you spend, I don't know, $500 a year changing oil, changing tires, or fixing something, so write that down as well. Usually you'll get that. If you pay by credit card, you can always check your credit card statements to see how much you've paid in the past year. I don't know if you make any donations per year as well. Obviously travel, can't forget travel. So if you travel once a year, take a vacation once a year, maybe include that in. I'm just using random numbers here. It really depends. It's going to be different for everyone based on the size of the family, of course. Now, as you can see, my yearly expenses cell, which is under the monthly column, got updated because it's a formula. So it takes all my yearly expenses and divides it by 12. So now I know that from my monthly expenses, I've got to allocate at least $666 for expenses that I make in one shot, lump sum expenses. If you've got more yearly expenses than the ones here, just simply add the category that you want. I don't know, what's another example of yearly expenses? Let's say snow removal. And you just add it in here. So anything that you know that you pay once a year, maybe just add that in. Your accountant maybe as well. I don't know how much you pay, maybe $200. So as you can see, yearly expenses really add up if you don't keep track of it. Some people pay an annual fee for credit cards, so maybe include that in if you do. So that's really up to you to remember what are your yearly expenses. Sometimes we really forget about it because it happens once a year. So just sit down and try to remember all your yearly expenses. Look at your bank statements, look at your credit card statements, and try to just gather it once, at least the categories, and then you can get the actual numbers after. So I'm just showing you an example on how to set up a budget. So we set up the income. It'll be different for everyone, of course. We set up yearly expenses. Now let's look at the monthly expenses. So this first expense will be living expense. It could be either a mortgage or rent, depending if you own or rent. So let's say you've got $800 mortgage. Let's say condo fees, you've got $100. Let's say you're paying $300 for your car payment. Car insurance, I don't know, let's say $50. Home insurance, let's say $30. Let's say gas. Right now, no one's traveling, so it's $150. You can always come in and update your budget on a monthly basis, or maybe every 2 months or every 3 months if you feel like the numbers have changed or the situation has changed. I like to be specific. I didn't put a category just for groceries, just so that I can get more accurate numbers. I like to put the names of the places that I actually shop at, so I can look at my credit card statement and just filter on these suppliers or merchants and get the exact numbers. So if I do that for the past year, I've noticed that I spend around $900 per month at Costco, and maybe $100 at Adonis, and then maybe another $200 at Walmart. And then I've got a line of credit, for example, so I pay interest on that line of credit. So I'm going to say I pay about $100. This is another credit card on which I have monthly installments but no interest, so I pay about $200. So these are my yearly expenses. I've got my cell phone, of course, so let's say $140. Got my internet, $75. Got my hydro, my electricity bill. So let's say on average for the year, it's going to be different every month. So let's say on average for the year will be $75. Got my health insurance, about $160. And I've got my daycare. You might have more expenses, so just simply add it here. Netflix, for example, or cable, or maybe coffee shop, restaurants, if you want to be more specific. I don't know, on Netflix, let's say $20. Cable, let's say $50. Coffee shop, maybe, I don't know, $200 a month. And restaurants, maybe another $300. So it'll be different for everyone. Just simply add your categories here and then enter the amount that you actually spend per month. Try to be as accurate as possible. Use the average maybe for the past 12 months just to give yourself the best idea possible. So the challenge will be to really be honest with yourself and come up with all the different categories that you actually spend money on. Sometimes, most likely, you will forget some the first time you do this. And once again, you update the numbers from the bank statement, from the credit card statement. So mortgage is usually paid from your bank account. So simply look at your bank account to see how much is being withdrawn every month. And if it's every 2 weeks, just make the adjusting formula, which is times 26 divided by 12. So once you've entered your income, your yearly expenses, and your monthly expenses, this column here, potential savings, updates automatically. So right away it shows me my monthly income, my monthly expenses, and then my potential savings or loss. So right now it shows that I'm actually saving about $1,100 a month. So that's good. That means I spend less than what I make. So I've got some breathing room. That's assuming that I've entered everything here correctly and that I didn't forget anything. Actually, I forgot clothes. Maybe I should add clothes. I don't know, maybe $500 a year? Could be different for everyone. I know I don't spend that much. My yearly expenses here increased because I just added clothes to my yearly expenses. And now my potential savings per month is still around $1,000. So now that everything is out in front of you, you could then go and see what you could change, what you could decrease, what are you spending too much money on, and you could see the impact on your potential savings. If you feel like you really don't spend that much and you can't really decrease your expenses, then maybe it's time to look for extra revenue, ways to increase your income. Either get a new job or maybe start something on the side. If housing is too expensive, maybe downsize. If your car payment is too expensive, also same thing, maybe downsize. Maybe notice if you stop buying coffee from Starbucks or Tim Hortons and remove that completely, you could see you've just increased your monthly savings to $1,258 in this case, in this scenario. And let's say you don't eat out and you eat at home only, so we get rid of restaurants as well. Now we've increased our savings to $1,500. And here I've just added a small formula here to see how much of my income am I actually saving. So in this case, 26% of my income I'm actually able to save. And by actually saving this money, I can go put it in a savings account. It pays me some interest, or I could go buy some dividend stocks and it'll pay me some dividends, which will then increase my income. Or I could start a business on the side that might increase my revenues from my side hustle. So it's very important to make sure that you're spending less than what you make and that you're not living paycheck to paycheck, and obviously to properly invest this savings so that it increases your income. Just because you have extra money on the side doesn't mean you have to go spend it and increase your monthly expenses. So let's say you don't have cable, you don't use Netflix, you're saving $1,600, now you're at 27%. Obviously cell phone, everyone needs a cell phone, but maybe you could reduce the plan. Everyone needs internet at home. Can't get rid of utilities. You've got your yearly expenses, you've got your car, everyone needs a car. Some people can manage, but I mean, if you feel like you really need a car, then you really need a car. Depends where you live, of course. You've got your yearly membership if you're part of an association. You've got your property taxes. You've got your car maintenance. You've got your donations. You've got your travel. I mean, you have to travel, right? So maybe the only thing I could see potentially that you could reduce here would be probably clothes, credit card fees as well. So let's say if you only use credit cards with no annual fees, so you just saved $100 per year. Oh, and maybe another category we can add here is cash back from your credit cards. So let me go back and put numbers here. So Netflix, 20, cable, $50, coffee shop, let's say 200, and restaurant 300. So what is our savings rate? So we're at 18% of our income in this example. But what's good is now you can go look at your monthly expenses and see what can you pay with your credit card. So obviously mortgage, condo fees you can't pay with your credit card, car insurance, home insurance probably cannot pay with a credit card, but gas you can pay with your credit card, Costco, Adonis, Walmart, your cell phone, your internet, your health insurance, your Netflix, your cable, your coffee shop, your restaurant. So now you're at $2,200 or $2,300 a month that you can put on a credit card, that you can pay with a credit card. Doesn't mean that you leave it on your credit card, but that you can pay with a credit card and you get cash back on that. So we've got about $2,300 times 12 months, but then we've got some yearly expenses that could also be put on credit card, so that you can pay for with a credit card. So you've got the clothes, you've got the accountant probably, you've got the snow removal, you've got the travel, you've got the donations, you've got the car maintenance, and maybe the association that you're part of. So that's $34,000 that you can put on a credit card, that you can pay with a credit card. And let's say you're getting, I don't know, let's say you've got a card that pays you 1.5% cash back. So that's an extra $510 per year. Now this column shows the monthly income, so you want to divide that by 12. That's an extra $42 per month. So not bad, everything counts. And now your savings rate goes back to 18%. You're saving about $1,100 a month in this example. So yeah, just a quick way of keeping track of your expenses and revenues using a regular spreadsheet. I'll make it available if you want. Just message me using the contact info below. But yeah, just a matter of adding all your sources of revenue, all your yearly expenses, all your monthly expenses. It'll be different for everyone. So it's just a matter of remembering what you really spend money on, updating the numbers with actual results, which will come from your bank statements, credit cards. And obviously if you pay cash for things, then it's going to be hard to remember how much you spent unless you keep receipts. But that's one of the advantages of paying things with credit cards, so that it's all tracked for you already on the credit card statement. But at least this way, when you have a budget in front of you, even though the money coming in doesn't come out at the same time, but at least you know on a monthly basis, you know that you're actually saving money, or you're actually spending too much money. What if, for example, you didn't have that side hustle, or you weren't getting that government assistance and you weren't driving Uber? So right now you're losing money every month. So you definitely have to cut back somewhere. Maybe drop the association, maybe not make donations. I'm not going to say travel. I think it is important to travel. Maybe cut back on some clothes. Let's say just spend maybe $200. So you're still losing money on a month-to-month basis. So you're going to have to cut some more things. So definitely maybe coffee shops would be the first thing to go. So now you're at $26 loss per month. You don't want to be living either paycheck to paycheck, so you're gonna have to cut something. So cut the restaurants. So now you're saving, based on this situation here, you're saving $273 per month. and your savings rate is about 6%. Obviously, the more you save, the more you can invest, the more income you can generate from your savings, from your investments, and then the more you can save again because your income will be higher. It doesn't mean you can go spending some more unless you really need to, but then it becomes a snowball effect. Maybe cut down on cable. If you're always watching YouTube anyways, why get cable? It's going to be personal from individual to individual, but just important to be honest with yourself and put it all in front of you so you can actually visualize it and see where you need to cut costs, or maybe you need to increase income. Now, I personally will maybe update this once a month just because it's fun for me. I enjoy these type of things. But honestly, if you know that your situation is the same month to month, you don't have to update it every month. But I think it is important to have at least one just to know what your financial situation is. Maybe every 3 months you can go update the numbers, check your credit card statements to see if you're actually respecting these numbers or not, if they're still valid. All right, so if you have any questions, leave in the comment section below. And say you were ready to invest and you wanted to buy stocks. A great Canadian broker that allows you to invest on the stock market is Questrade. I've got a referral link below that gives you $50 in free commissions. Also have some interesting links below if you want to check your credit score for free. And if you actually want to open a savings account that pays you 1.5% per year. Thanks for watching.